Tapiwa, I think we should start.
Please.
Okay. Great. Good afternoon, everybody. Welcome to APSIP's inaugural Digital Disruption series. This is part one of a 6-part series where we will be unpacking what 4IR actually means for us as South Africa, and in particular for the financial services sector. We're very excited to have the panel that we've put together today, who themselves are leaders in their own right, both in the financial services sector and in the technology sector. And we look forward to hearing their insights on how they see this disruption that has already gripped the country and the world today, and how they see things unfolding. This, of course, is a scene-setting session today because it will inform what we discuss going forward as we unroll this digital disruption series. So we're quite excited, and we welcome you all. We have a fairly decent turnout today. I see the number of participants is growing as I am talking. So hopefully we will be able to share with you today what is important in all our lives going forward, but hopefully shed some light on some of the things that we hear in the papers and in the media that we do not quite understand. So we're hoping today that we will demystify what this 4IR is and what this digital disruption is that is being talked about, how it impacts on our lives, how it impacts on us as workers, us as business owners, us as leaders, and as a society. So I'm very, very excited to introduce on our panel, we've got Andile Ngaba, who is the chairman and founder of Convergence Partners. He likes to be described as a technologist. And today he's going to be talking as a technologist amongst a panel of bankers. And he will give us a keynote, and we will then have some short input from our next panelist, Sim Shabalala, who is the CEO, Group CEO of Standard Bank, the Standard Bank Group. And we're also very excited to have Basani Maluleke, who is the CEO of African Bank, who will also give us some snippets and some thoughts on this matter, this subject of today. We will then go into a conversation and we will open up a Q&A. People are welcome to type on the Q&A icon on this Zoom, any questions that they have, and we will make time later on in the conversation to try and address some of the questions, depending on how many there are. We will try and address as many of them as possible. So welcome everybody, and I would then like to invite Andile to please kick off the conversation of today. Thank you.
Sorry, thanks, Paulo. I will project as quickly as I can, if you don't mind. Let me take this opportunity to thank you and your colleagues for inviting me and other colleagues in this event. Can you see my screen?
Yes, we can.
Thank you very much. So first and foremost, let me thank APSIP for really convening this very, very important topic today as we navigate the fourth industrial revolution. As you probably know, that the country had a commission which was chaired by the president and the deputy chair, Professor Marwala, and we all participated. We have finished the report. But what I'll do today is just to provide, this in the context of financial services today. The topics I will cover, is the foundation. By the foundation is the internet, trust institutions, of course, we all, I'm sure, we deal with all the time. And then I'll talk about two topics, one, the challenge and what the opportunity is. That's how brief I will be. The foundation of everything that we do in this disruption is happening on the internet. And the internet is the foundation. As you know, that the internet has two parts. There's the dark part of the internet where, everything that, is bad is happening, even sometimes good things, by the way. And then there's the light part of the internet, which you probably use every day. I always say, never try to go into the dark part if you don't have the tools to get there. Now, what sits on top of this today that drives this new change in the financial services environment? The first one is cloud computing I'll talk about. 2 is artificial intelligence. 3 is blockchain. And of course, fintech in general. Now, trust institutions, these are institutions in this financial services sector that have been with us, for probably more than 100 years. These are, central or reserve banks. Financial market infrastructure broadly, payment agents, calculation agents. These institutions are institutions that have been in existence to give trust to, to this very important sector of the economy or society, basically. But what has been the challenge that, banks, financial services, even individuals are dealing with today? Cybercrime. Cybercrime is something that confronts all of us, whether you are a user of a mobile phone or a computer, whether you are a big institution, whether you're a bank, whether you're a government, and all of us are suffering from this. Where does this come from? It's, again, coming out of the internet, as I've said. Now, today, cybercrime is about 6 trillion in the world. This is the number that is projected next year. And financial firms, 300 financial firms are more likely to be attacked by criminals. And this is something that we really are every day fighting against. Here's the challenge though. The challenge is that, we don't have enough budget to fight this. Both institutions, companies, governments, banks, everybody, we don't spend enough money to fight against criminals. And these guys are ahead. They've got much more sophisticated tools to basically conduct crime. Now, the whole environment of cyber has now been digitized. There are almost 300 billion passwords today, in the world, and more than 100 billion of lines of code of software that has been built basically over time. So cyber vulnerabilities exist in the form of malware, phishing, AI, and these are really putting risk in the digital assets of the financial services environment. So as we embark in this journey, we have to find means and ways to address this. As I've said, this comes out of the dark and the light web. As I've said earlier, cybercrime costs about 6 trillion, and this is ransomware, data breaches, DDoS, and this is almost, data theft, lost IP, passwords, everything you can think about that is happening. And unfortunately, criminal justice system in the world is not sophisticated enough to be able to respond to this very dynamic and complex environment. I'm going to just give you 2 or 3 types of attacks that are very prominent today and are very sophisticated. One is called advanced persistent threats. These are almost, some of them are state-sponsored in a way. These APT groups, I mean, they attack, assets of countries. They conduct, cyber espionage, cyber sabotage in almost infrastructure that drives the economy of countries. They attack high value targets, such as large corporations and banks and nation states. And their goal is to steal information over a very long period of time. They find themselves, they embed themselves in digital infrastructure of institutions. And this is something that really confronts us. Sometimes they target easy targets like, for instance, credit bureaus, but the target is not really a credit bureau, but it could be financial institutions. They just target the credit bureau purely to access data, basically. Now, prominent organizations, one is called Lazarus Group, is well known. Basically, they target SWIFT in essence globally. One is called Money Takers, there's Cobalt, and one is called Fin7. I've just highlighted, there are a number of these groups. They are known in the world. They conduct these, APT, these, targets to financial institutions. Now, what do you do to counter this? The one way to counter this is to build what is called a threat intelligence platform. Which in our advice that we give to financial institutions, that rather than do this alone, try and do it as a community, because you will never be able to fight, some of the capability as a single institution, the capability that comes from these groups. So we argue that, we need to work together, to fight this, because this is something that is really beyond anyone's means. Because these guys use, AI, machine learning, basically to build these very complex systems. Now, the other tool that is quite used recently is what is called generative adversarial networks, in short, GANs. These are algorithmic architecture that are using two neural networks, putting one against each other. And these GANs are very clever, basically, and they know how to remodel themselves inside your own system. They understand what is happening because, GANs are typically used in image classification. For instance, if you use faces of people for KYC, they know how to generate pictures and faces to present to you what you want. And this is something that is really confronting us. The other area that we see these GANs that are being used, for instance, is in passwords. GANs, they learn and they know how to basically study passwords, because as you know, in the dark web, there are billions of passwords that have been stolen and people are selling them. And these GANs are used to do analytics in password in order to improve those who want to use password to enter into your infrastructure. So cyber resilience at every level of organization is very critical. We have to, for instance, make sure that chief information officers in organizations, in banks, are well endowed with resources to fight this. This is something that really, it has to be at a board level in our view, that boards of institutions, financial institutions, they need to have cyber committees to deal with this type of risk, basically. The challenges confronting the sector, as I've said, digital transformation, the legacy systems, digital skills, and these are cyber threats. Now, let me talk about opportunities as I finish. As I've said, cloud is an opportunity, AI and blockchain. These are technologies that we believe that are critical, in particular in the African continent, as we move from traditional to digital banking or wallets. Now, regulators are very important in this. And, we are coming out of an environment where IT was purely an enabler of financial services. But we are now going into an environment where the digital environment supported by technology is almost at the center of everything. We see this in the new types of digital wallets, Google Pay, WhatsApp Pay, Facebook Pay, Ant, which has just been launched recently, Apple Pay. These are all disrupting the environment. Now, one very important one I want to talk about is blockchain. Blockchain is very active in what is called decentralized finance. DeFi is now a body that has really been very popular in the last few weeks and months using Ethereum blockchain. I mean, this shift leverages, smart contract, and it offers, new decentralized financial services system. DeFi is used, this smart contract, for asset management, KYC, data analytics, derivatives, identity, margin trading, marketplace payments, etc. And it's a platform that really everybody is using. Just to show one growth, that last year it was about $276 million, and now it's sitting at about 7.2 billion. Now, Ant is one example you must have seen. Basically, this, Alipay has launched this. It's an open chain. These guys are doing something incredible between Hong Kong and Philippines. They support SMMEs. Again, it's an open chain. They probably have the largest patents today, for instance, in the blockchain environment. These are some latest developments we have seen. PayPal, Visa, and MasterCard, they filed for patents in terms of blockchain and crypto. Again, this shows the extent to which everybody is moving into this. Some financial services companies using blockchain. Goldman Sachs globally, they've built a blockchain platform, Citi, and many others. So we are here. Artificial intelligence, as I finish, is something that is now being used for chatbots, for RegTech, for stock market prediction. And then RegTech, we can't survive. We are living in an environment whereby RegTech is integral part of a financial services environment. It will continue to improve automation, basically because of required standardization as we go into the future. Cloud, lastly, is that we have to build data lakes in the financial services environment, to be able to put all this data in the cloud and be able to ensure that we use open APIs to build new products and new services for clients. And open APIs and financial services is something that is on demand now, and everybody is looking at it. And people are looking at open source as a new way of building, removing old mainframes in order to make sure that we can get into this new environment. So the future really is open source. It's open source in security. It's open source in transactions, in the way in which we build the financial services environment. So Finos is, again, one very important organization. As I conclude, Morgan Stanley has developed an open source multi-language system, which captures an application domain model and business logic in a technology, agnostic environment. This is something that really for me, in the recent past, that I could say it's cutting edge and is changing the way in which this environment is. Again, using Finos technology. In South Africa, we have to make sure POPI, FICA, RICA, of course, including GDPR, is something that we adhere to. In our view, all those need to be changed if we want to embark in this journey of digital. Thank you. So that is really broadly, very quickly, how I see this environment, and it's changing very fast, driven by blockchain, cloud, AI, and these new technologies. Thank you very much.
Wow, thank you so much for that. It was quite a lot to take in. And there's clearly a lot that is happening across the world. And one wonders how far we are as South Africa, or how close we are to the rest of the world in terms of some of the technological innovations that are taking place. And I do think that your presentation really has given us a lot of food for thought, and I would like in our discussion to unpack some of the areas a little bit further. I will now invite Sim Tshabalala, the Group CEO of Standard Bank, to give us some initial thoughts on this subject today. Thank you.
Polo, thank you ever so much for that kind introduction. Good evening, everybody. And yeah, I must agree with you, Polo, that was a real tour de force by Andy. There's not much really to add, other than really to emphasize a couple of points that he has focused on. I think everybody on the call is keenly aware that clients' expectations regarding finance have been influenced in large measure by their experiences of the big techs. Just by way of example, I'm sure not many people in this call use any search engine other than Google. And people expect their experience with financial services to be as good as what they get on their search engine. They want the experience to be simple, one click, and it has to be available 24 hours a day. The fact is that companies that are going to do well in the next few years and the next few decades are those that are perceived by clients to be as reliable as Google and as convenient and as user-friendly on the smartphone as these companies are. Those companies that will survive will be the ones that can meet all their customers' needs in one place, quickly and efficiently, not through a single product or service, but through the provision of a complete solution that removes the hassle from the customer's lives and helps the customer free themselves to be able to do other things that are special in their lives. It's important also when one reflects on what is happening in the market. You've seen market gyrations in the last couple of days, but here's what is true. The big tech companies are about the only ones whose share prices have risen since the start of the pandemic. And the last time I checked, and I checked just before this meeting, but on average, Alibaba was up 25% since the start of 2020. Microsoft was up 32%. And then Amazon was up 70%. I mean, that tells you something about what the stock market is thinking around platforms and big tech. What this means for banks and insurers and asset managers is that our lives have changed forever. And at Standard Bank, we are applying our minds to this, as I'm sure our colleagues at African Bank, and I'm sure we'll hear a little bit later about how they're thinking about this. A really important element of this, which was made by Andile, is that comprehensive MI, artificial intelligence, big data are important components of what the response has to be, as are human skill. And I'm sure it's an issue we're going to come back to later on. I also fully support Andile's point that we need to work together, that is business, government, and organs of civil society, to create a path to sustainable economic development and the empowerment of each and every African on this beloved continent. And so while the fourth industrial revolution represents a huge boost for African financial inclusion, it creates the risk, however, of leaving vast swathes of our people, businesses, and whole communities out of the mainstream. Because unfortunately, this is an environment of what they call winner take all. This risk applies to incumbent institutions such as ourselves, who lack the agility and the resources to adapt to a changing environment. It applies to employees, you and I, Polo, and everybody on this call, whose skill sets are reaching a sell-by date. And it applies to African consumers who own mobile phones, but who battle with high data costs, limited telecommunications infrastructure, and in some cases, who lack familiarity with digital services. We have our work cut out for us. Let me close my opening remarks by making reference to an important issue that Andile has raised, and it would be a mistake if I didn't address it head on. And that is the single thing that keeps me up at night, and I'm sure it keeps up everybody who's a banker, and that is cybercrime. The statistics are horrendous, as Andile has set out, but I'm sure UPSIP members would be interested to know that financial institutions spend a vast amount of money to protect themselves and their clients from the scourge of cybercrime. At Standard Bank, for example, we spend over R500 million per annum on risk management systems that are calculated to protect us from cybercrime. We've got hundreds of artificial intelligence experts, data experts, behavioral scientists, fraud experts that spend a lot of time pouring through data and looking at information. I won't quote to you the number of attacks we receive a day, because I think that would be competitive information to disclose. but you will be staggered at the amount of attacks that we suffer each and every day, similar to the ones that Andile was referring to. Polo, in the interest of time, perhaps I should pause there and hand back to you.
Thank you so much, Sim. I mean, you've highlighted very, very important points, particularly around the human skill element, because I think that is probably, other than, the ease of doing business as a result of using digital technology, which I think a lot of us welcome. The reality is that very many of us might be left behind. And in fact, there is a scare that this might actually further exacerbate the inequality levels that we have in this country, because not very many people have got either basic or even deep technology skills. So I think it's almost like a pandemic on its own, and I think it will require dedicated focus and attention. And that's what we are hoping to spend some time on in the coming series as well. So thank you very much for that. Basani, I think this is a nice segue to your presentation, because you operate in a part of the market that I think your mainstream banks have traditionally, at least maybe now they are, not played much in. And it would be interesting to see what you are seeing from your side of the world, and what African Bank is doing to respond to this disruption that is gripping us as well as a country. I'm trying to share your presentation, Basani. Can you see it?
Yes, I can.
Great. All right. You will drive me. Okay.
Okay. Good. Good afternoon, everybody, and thank you so much, Polo, for convening this and for allowing me to be a panelist. I was struck by both the presentations given by Sim as well as Andile, but the one stat I saw, I think over the weekend, that really blew my mind was that Apple is worth $2 trillion. And the first trillion took 38 years, I think, to get to, and the second trillion took 2 years. And that just talks to what consumers want, and to the fact that Apple is clearly getting this right, and it's something that we all need to take notice of. So, Paul, if you go to the next slide, can I actually take control of this? Great, thank you. So, thanks.
Have you taken control?
Okay, there we go. Okay, I've requested it, so hopefully it will come through shortly. But what I wanted to just talk about by way of introduction is that what we are seeing at African Bank is the focus of digital disruption, particularly with fintechs, is that it's all about customer satisfaction. So what fintechs tend to be very good at is at identifying a customer need that is underserved, and then developing something that is intuitive, convenient, and cost-effective. And as a result, they are able to, or at least they were hoping to be able to get lots of customers to use it, but I think that is typically where a lot of fintechs come unstuck, i.e. how do they get these customers on, and how do they build the trust with those customers, which is why more and more you're seeing this partnership between banks and fintechs. So what we realized is that customer insights and behavioral economics are critical ingredients in driving customer satisfaction, and making customers feel safe on digital platforms is a priority. Both Sim and Andile have spoken about this. But the one thing, Sim mentioned this, but I think it's definitely worthwhile reiterating, is that the velocity of learning of an organization becomes a critical success factor for any business. So this relates to the ability of all of us to learn and relearn new skills to adapt to this new world. And that's something that we at African Bank are paying a lot of attention to, around how do we get our customers, our staff to learn new skills. And what's been incredible during this lockdown period is that we've seen more and more of our staff actually using online learning platforms like Udemy and taking those on at a much higher rate than was the case pre-lockdown. But you try and change the slide for me. Perfect.
I think you're in control now.
Am I? It's just slow and I'm impatient.
Yeah.
That's probably true. So So as I was saying earlier, undoubtedly customer satisfaction is correlated to profitability and to staff morale. So I think that's something that is accepted globally, that the happier your customer is, the more likely the customer is to spend more money with you, as well as to refer their friends to you. And as a result, the better off the organization will be. And the happier the staff is, in fact, the happier your staff is, the better off your customers are. So how we have thought about customer satisfaction, and I think I've spoken quite a lot about this over the years, is this idea that we as a business are under pressure to consistently be building capabilities today for what we think customers are going to want in the future. And to be able to do that successfully requires an investment in understanding our customers and understanding them at a very granular level to ensure that we can anticipate where their needs are going to go. The second thing is about the technology stack that we're going to build. So as I say this, I cringe knowing that Andile, as a technology guru, will very quickly realize how little I know about this. But I suppose that the point is, we have built what we think is the gold standard of omni-channels, which allows our customers to interact with us across different channels seamlessly. So practically, that means the customer can start a transaction in a branch and finish it in our call center or on their app when they get home. And this really has the benefit of creating convenience as well as lowering our cost to serve, which, as you can imagine, is an important focus area for any bank, given the fact that the burden of compliance is increasing. We need to find other areas where we can optimize our costs. We've also realized that engaging customers meaningfully is probably the most important thing. And I'm sure you all receive multiple text messages every single day from multiple providers trying to sell you something. But there's no question that when you get a message with somebody from someone who knows your name, who knows what you've been looking for, and is able to offer you a proposition that is relevant, and that is the standard which is all we're holding ourselves to. So how do we understand our customers well enough and offer them propositions exactly when they need them at a price point that makes sense for them? And then, of course, the last thing I'm going to talk about on the slide is just the whole point about developing data scientists. So what we realized as African Bank, over the years, is that obviously having a strong data science capability is important, and we need to invest in it. However, the reality is that the skills to do this simply just don't exist. So I think perhaps like other banks, we have invested in establishing a data academy where we have been training our own data scientists. So we were quite pleased to have 20 of those graduate last year and join us this year. And we've got 20 more who will be joining us in the next few months. And the key is to continue to develop our own timber, as they say, to make sure that we're able to have the data skills that we need to do well in a digital age. Sure. So I think on my last slide, what I was trying to just, make the point here of is around what does COVID mean? And what is the lasting impact of this COVID outbreak? So you'll see there that I've made the point that since lockdown, we have seen a significant increase in our app downloads, as well as people utilizing our USSD platform, our banking app, as well as our online banking platform. And this has been very gratifying because, like all banks, the intention is to try and move as many customer engagement opportunities online, because that is definitely our lowest platform to serve, our lowest cost platforms. In addition to that, we recently launched our chatbot called Karabo. And she's very new, so she was launched only in March of this year. And we have seen the growth in the number of requests going to Karabo just increasing month on month, which is really gratifying. And it speaks to the fact that customers are using these platforms. However, notwithstanding the uptick that we are seeing in online and digital usage, we are also seeing that customers are returning to our branches as quickly as they can as the lockdown has eased. And I think in the kind of deep dark days of lockdown at level 4, level 5, there was a lot of talk about how digital was just going to be the thing that drives customer interactions. But we can definitely see that at least for the short to medium term, customers are still going to want to utilize the branch networks as much as they have in the past, which I think is also very interesting. But I'm going to leave it there, Polo, and I look forward to engaging with the audience.
Great, thank you so very much, Basani. I think you also touched on very important points around how customers are responding to what is happening right now. And I think COVID was a very good time to test, to what extent our customers are actually sufficiently educated to engage with these tools and how they have found them, whether they've been convenient. So it was also quite interesting that people being people still want to have a people touch or a human touch, which then raises the question in my mind around, so what is the right balance between bricks and mortar? But we'll get to that. So I'm now going to invite the full panel for a conversation. There are very many questions that I have that came out of all your presentations, and I would like to ask maybe 2 or 3 of them, and then hopefully we can start engaging with our audience, because after all, this is really for the benefit of the audience. Andile, having seen what is happening across the world with the role that you play in the space, both here at home as well as elsewhere in the world, I mean, you gave us very good examples of some of the international banks that have really fully gone either platform or digital. How do you see the financial services sector in South Africa? How does it fare against its international counterparts? And what should we be concerned about, if anything?
Thanks, Polo. I think the first thing really I would raise is that we need, I mean, the starting point is domain knowledge, basically, of to understand what is happening, to understand the full stack of digital, to understand, the entire ecosystem. Now, this will require partnership, between financial services and institutions of learning. And there's no way whereby this can be tackled, by an individual institution. We need all of us to basically, I mean, if you look at various universities, they've got traditional departments of either information systems, engineering, computer science, accounting, the classical old model of learning. Now, we need to have these combined, programs or degrees that either, for instance, is data science combined with, finance or accounting or computer science. Because today, if you want to combine computer science and, finance and accounting, people will tell you, no, we don't offer that. Now, and yet this is what actually the world requires. I mean, if you are a quant in a bank, you need to understand, Python, you need to understand R, you need to understand, machine learning, you need to understand how to do all these things. I mean, if you are, for instance, I was talking to a friend of mine who's an auditor who has been in the audit profession for a long time. I mean, she was saying to me, look, I mean, things are changing. I mean, their profession is being disrupted, and they're trying to retrain, for instance, their audit clerks to basically use technology, than the old way of doing. So the most important part is for all of us in the tech sector, in financial services, in institutions of learning to come together and basically, design programs and accelerate in producing people who are going to come out and get into the market. Without that, we can't compete, one indicator I would like you to have a look at it. If you go to Coursera, Coursera produces a report every year. Go to the Coursera website, you'll find it. They do ratings of countries in 3 programs. 1, data science, 2, technology, and 3, business. I mean, Coursera has over 40 million people studying through Coursera. As South Africa, we are not doing bad there. I mean, you know, comparatively, we are between 30 and about 39 rating globally. Now, I mean, it gives you the number of people who study data science through Coursera. It gives you numbers of people, for instance, who study business and artificial intelligence. In the Africa region, I mean, Africa and Middle East, it's Israel and then us. I mean, if you then look at these by regions. So first and foremost is really knowledge acquisition. You know, building domain knowledge as society. I mean, APSIP should really, you know, not only talk about, you know, your members being, for instance, people in the classic financial services. You need to recruit members way beyond that in the data science, for instance, in the computer engineering space, you know, not computer science, in the computer engineering space. So these are skills that are today, you know, you can't look at them in silos. So that's the first area, you know, knowledge acquisition, you know, building these layers, collaboration with institutions of learning, and for us not to deal with this as individual organizations. The second part, I mean, you asked from a competitive, where are we compared to basically, you know, the rest of the world? Look, I mean, Paulo, we have clients in the financial services environment that we provide services to across the continent. I mean, thanks that AWS is now putting infrastructure in South Africa. I mean, and Azure, I mean, and hope Google will do the same because of issues of sovereignty of data. I mean, I think what delayed a lot of our institutions was that you needed, I mean, you do have tier 3 data centers, but you needed, you know, the like of AWS to put, you know, tin, bare metal on the ground in order for people to be able to use it. So I do hope that, you know, by them having that infrastructure on the ground, the adoption is certainly going to change. I know there've been a number of announcements. I think SIM has partnered, Standard Bank has partnered with AWS. I saw it in the media, which is a great thing to move to the cloud. So yes, there is a lot happening, but we really need to accelerate this, and the accelerator is going to be skills, domain knowledge. Now, one thing, I talked to some few friends of mine who are leaders in these financial services. You know, if I remember, 10 years ago, I would go to banks selling networks, selling servers, you know, selling applications. And we were seen as an enabler rather than, you know, as people who could really help assist in the development of the strategy of the bank. So I was saying to some friends of mine, saying, I think this is one paradigm that really needs to, I mean, it is changing, you know, to put technology, you know, not as an enabler, but as a key element of driving, you know, a bank strategy today.
All right. Thank you so much. So I think Sim, what Andile is saying to you and Basani is that the next time you go to hire people, you shouldn't go to look for BCom graduates and actuaries, but you should be looking for computer scientists and people like that. And I think that's just the reality of where we are. And I think the point around what they call, I think they call it dual qualifications, where you are an accountant, but you are also now required to have some knowledge of technology, is becoming quite a theme from what one is reading, where your new banker is expected to be able to straddle between the two worlds very, very easily. Which then, and I think the point that Andile makes about you know, partnerships with you know, institutions of higher learning really talks to the broader ecosystem that we need to build in order to be ready for this. I'm interested to know I will start with you, Sim. What Standard Bank is, what is your thinking process around the tech startup ecosystem in South Africa? And are you leveraging this ecosystem to help start solving some of the problems, some of the things that keep you up at night?
Yes, Polo. And Polo, if you don't mind, I want to pick up on some of the comments that Andile made, because they're so crucial to this discussion and to the question you're asking, because it goes to the heart of the South African national competitive advantage. And the first big point to make here is that we need to ensure that as many South Africans as is reasonably practical have got opportunities for lifelong education and training. That's fundamental. And I think I agree completely with Andile that in his paper and in his presentation and in his submission just now, he alludes to hackathons and their importance. And I can tell you, we use them extensively at Standard Bank. This year, as part of our technology innovation strategy, we launched a massive hackathon as part of this continuous learning in the 20 jurisdictions that we operate in on the African continent. I might just add that they constitute 75% of the continent's GDP. And we are focusing our people not just on finance, but on education, healthcare, renewable energy, and then, of course, financial services. So reskilling is important, completely agree, and we need to be doing it in partners. Since the beginning of this year, since around April, after the lockdown, 25,000 people in our business, we employ 50,000 people continent-wide, of which 30,000 are here in South Africa. But of that 50,000 people, 25,000 people registered on our learning platform, and they've accessed nearly 600,000 modules, spanning all the areas that Andile was speaking about, but also focused on financial services and IT. In June, just speaking of partnerships, Andile would be aware, we make reference to AWS. We have a partnership with AWS, but we also launched a partnership with Salesforce, which is going to be important for our technology stack in general, but also for our learning. They have a program called Trailhead, and I'd encourage all 300 people that are on this call to just Google it, go onto that thing. It's a democratized learning tool, and it is extraordinary what you learn from it. We are encouraging our staff to have access to it and to use it. Turning to the South African national competitive advantage, Polo, that you're referring to, it is true to say that South Africa is definitely a fintech, indeed increasingly a big tech hub as well. But I worry intensely that unless we get our act together as South Africa, we could lose that national competitive advantage to East Africa, which is not necessarily a bad thing. You know? But as a South African, I would say we need to redouble our efforts to increase our national competitive advantage. Speaking of the fourth industrial revolution, there is no doubt that Johannesburg and Cape Town, because of the interface between the financial sector, the universities, and the professions, there's no doubt that we are well positioned to leveraging that network of companies to compete with Tel Aviv, with Berlin, with Silicon Valley as a fintech hub. As a financial institution like Basani, we spend a vast amount of money. Standard Bank has over 20 billion rand on the intangible asset. We spent over 30 billion rand in the last couple of years on our IT systems, calculated not to make Andile and his ilk wealthy, but to put ourselves in a position where we can compete with the new entrants, the big techs, and indeed the incumbents who are determined to become more competitive. And so my summary proposition to you, Polo, is that there is no doubt that South Africa has a national competitive advantage in this space. But like Andile says, we need to leverage it through partnerships, particularly with the institutions of higher learning. Let me stop there, Polo.
Thank you so much. I think what is pleasing for me from all the inputs from the three of you is that there's a clear sense that we are not as bad as, you know, sometimes we might think we are, or we're not as behind rather as sometimes we might think we are. It's also pleasing to hear that there's so much resources and time and energy being driven towards the upskilling, because you know, we've been doing some work in this space, and we have found that there's a very big gap between what corporate South Africa needs in terms of these skills versus what is available out there across the different types of technology skills. So I think the work that everybody is doing is quite pleasing, because in fact the areas that you're saying you're training in are exactly the areas that have been identified as areas that need urgent attention. We spoke about the need to reskill our workforce so that they are able to, I suppose, be more efficient and be relevant to the business of today. Basani, you and I had a brief chat about what about the customer. You know, we operate still in a country where, yes, levels of use of phones are quite high. In fact, it's 1.6 phones for every one individual in South Africa, we are told. But the use of internet, or rather access to the internet, and Sim, you touched on this a little bit earlier, is at about 56%, meaning that not everybody has got access to the internet, which then says that the other, I suppose 44% would not be able to do, you know, banking, at least, you know, on the internet, even though they've got phones. And Sim, you also talked about the high costs of data. So what should we be doing? What are we doing, and what should we be doing? Firstly, to bring the customer along from a skills, you know, an ability to actually engage with the digital tools that you guys are all developing for the benefit and convenience of the customer. But also, I suppose, more broadly, what should we be talking about with the regulators around bringing down the cost, for instance, of data? Is there any work that is currently underway, or is there work that you think should be done in order to make sure that we bring the customer along this journey of digital transformation?
Thanks, Polo. Definitely. So one of the things that we talk a lot about and actually have started doing is rolling out data into all our branches and restructuring our branches so that there is space in those branches for our customers to come and work from those branches, right? So if you can create the opportunity for them to get access to data and to work comfortably there, I think that's definitely a part one. The other thing that we do is that our app, as well as our online, our website, is zero rated. So it means that our customers are able to engage with us without having to use data. But I think that the point that Sim made earlier is one that resonates with me. So, you know, your customers are going to want to compare you to Facebook because Facebook has got the best, phone platform, and to Google because it's got the best online platform. So the reality is, as customers get more and more exposure to this, and they will, you know, it becomes very important to ensure that we continually invest in our own platform so that they become competitive and interesting for our customers. So that's the one thing. So making sure that they have access to online means that they're going to put more pressure on us. That's the point, to continue to evolve. And the other thing is just about training and education. So I was talking to my team this morning about the work we were doing during COVID to encourage our customers to use more online platforms, because obviously our call centers became overloaded with calls. So the idea was to ensure that we continually teach our customers to use those platforms. So I think it becomes much more important to continually educate our customers on what these platforms are and how they can derive benefit from using them. And then lastly, in surveying our customers, we have realized that they are also very concerned about identity theft, about cybercrime. You'll recall that there was the Experian data breach not so long ago that caused a kind of an uproar in the news. And I think as customers become aware of these things, right, they become a little bit more anxious about doing things online. I mean, my brother is in IT, he's been in IT all of his life, and it took him years to decide to actually bank online because he understands the horror that could happen should your identity be stolen and somebody access your accounts. So, so over and above teaching our customers about the benefits of operating online and building platforms that are seamless and easy to use, it has to also be about making sure that our customers understand how to keep themselves safe. So the simple things like don't share your password and don't share your PIN. And just very, very lastly, one of the things that I thought was very interesting is that 92% of all malware that is delivered in cybercrime that is orchestrated against businesses is from emails delivered to staff, right? So that's 92%. So if you can, so your staff can either be your worst enemy in terms of being the door to allowing cyber crime into your organization, or they can be your best security against it if they're properly educated. And I think the very same thing goes for your customers as well. If they are properly equipped, they can protect themselves as well as you from having to incur significant risks from a cyber perspective.
Great. Thank you so much. There's an interesting question here. There are very many questions, and I'm mindful that we are now 4 minutes to 6. So, and the questions might take us long. So I will do this by exception. There's a very important question that is being asked about, and it's a point that one touched on earlier around, do we see this digital transformation actually helping to improve access to financial services for your traditionally underserved market? So yes, South Africa has got an 80% banking penetration, but not that whole 80% actually transacts regularly due to perceived, whether it's perceived or real high costs of banking and things like distance access and things like that. Do you see this helping to close that gap?
I mean, I'm happy to start that off. So one of the things that we know is that the largest number of transactions is remittances. So people remitting money to their parents, in far-flung areas or in remote areas, or remittances across borders. So that's a huge area, and customers have predominantly preferred to do remittances through wallets as opposed to doing them through accounts. And I think the fact that you do have a lot more the newer players. So if you look at what Vodacom is doing or MTN is doing, a lot of that is about creating wallets and allowing customers to do remittances reasonably cheaply and easily because everybody's got a cell phone number, etc. So I do think that that creates that opportunity. But wallets, by their very nature, are very limited instruments. So if the intention is to enable consumers to have a broad array of products, so you want them to have insurance against household insurance, so that they are safe in the event that their houses burn up, or you want them to have insurance against cybercrime, or whatever it is. These products are much more easily available when you actually are banked, as opposed to using a wallet, which has less functionality to enable you to do that. So I think, with digital competitors coming into the market, it creates access points for people who otherwise wouldn't want to go into a bank. It demystifies banking, and I think creates more options for consumers. So it's good for the industry, in your view. Sim, do you want to come in there?
Yes, if you don't mind. I just wanted to underscore the point that Basani is making. I think if you look at our own statistics at Standard Bank, 99% of activity happens now on electronic channels. And there's very, very little activity that is happening on physical channels, such as the branch and the ATM. Importantly, however, vast swathes of our people are still not having sufficient access to financial services. And a large proportion of the reason for that has to do with consumer education. And the way we've addressed that, and again, to hook on to the point that Basani is making, is we have a variety of consumer education programs that we participate in, one of which is WalletWise, which has to do with remittances and wallets, as Basani was saying. And it aims to help people to use financial services efficiently and affordably. We have spent 52 million Rand on this program, and we've reached 8.5 million people. The importance of this point is that there has to be a continued investment by financial services, both in the hard infrastructure that Andile was talking about, as well as the soft infrastructure, which has to do with empowering people to be able to be active economic agents. Thank you.
Thank you so much. Andile, I'd like to bring you in here, and I think, again, scanning through some of the questions here, I'm going to try and summarize some of the key points, and really around regulation. You touched very briefly around firstly regulatory technology, and I would like it to maybe unpack that a little bit just to educate some of the audience members, but importantly to talk about the role of regulation today, because the world has changed. You speak about fiat currencies and things, sophisticated things like that. Can you share with us in some detail what you think we need to be doing from a regulatory perspective? We also have things like cryptocurrency or Bitcoin or ledgers or whatever they call those things, that we seem to not be clear about how they get regulated. I'm aware that the Reserve Bank is looking into this, but what should we be doing as a country to ensure that our regulatory regime firstly understands what's going on and properly regulates it so that we can unlock what this potentially can bring to our economy?
Thank you very much, Paulo. I think, I mean, I don't know if you probably, I would advise that you look at what happened with WhatsApp and Facebook Pay in Brazil about a few months back. And the reality is that the way in which, I mean, transactions or wallets or digital currencies operate, they've almost are in a totally different realm than the way in which we understood, you know, this environment. Now, I mean, as I've said, I engage regulators across the continent, both financial regulators and telecoms regulators all the time. I really think that, I mean, if I may talk openly, I wrote a paper that ICASA must be closed down. I mean, just recently.
I saw that.
You know, regulating telecommunications and the internet are very different things, you know, are very different. Again, I mean, I talked to my former colleagues, I mean, within the regulatory system of government and the competition environment. You cannot regulate the internet. I mean, the internet has no borders, you know. There's no border that says this is the internet of South Africa or this is the internet of another country. And the internet is the base foundation where most of these things happen, okay? So if, for instance, to give an example, I mean, why I'm starting at that level, at that base layer of the internet, because everything happens on the internet, to try and understand the way the internet is structured. I mean, one, the internet is not controlled by governments, by anybody. It is a multi-stakeholder platform that belongs to you, to me, to all of us. There is no one who can claim to say, I own, I mean, the internet. No government has the right above you or me or any one of us. So that is the philosophy of how internet was built. And that is the philosophy of this infrastructure, basically. Now, you then have a number of platforms that sit on top of the internet today. Now, I'm sure you must have seen this model of zero marginal cost based on platforms, how you can scale, you know, to 1 billion users, to 100 million users, to 200 million users. This is the model of the internet. It's about scale. It is about quickly, you know, building a platform and scaling it while your costs remain the same. Now, it's important for regulators to understand that we are moving in an environment with no borders, basically. I mean, today I basically engage, I mean, if you look at this call, I mean, the platform that is running this call that we are in is not in South Africa, just as an example, you know? And therefore, let's say something, I mean, you know, the evidence is not going to be sitting in South Africa, it's probably going to be sitting in a data center somewhere. So we need to understand this as regulators, basically, and not think that, you know, the internet infrastructure or blockchain, you know, for instance, if we talk about blockchain, we talk about distributed, architecture of blockchain, for instance, using Ethereum. All this hashing happens everywhere and anywhere in the world. It's not something that you can localize. So my message to regulators is very simple, that, you know, it's either you learn and understand this new environment, right, that is disrupting almost everything that we do, not only in the financial services, but in commerce in general. I mean, you know, destination, or what is called in law, domicilium, I mean, where you sign things. I mean, these things, I mean, if you look at COVID now, when we were in level 5, right? I mean, courts were running, you know, I mean, online, basically, you know, applications were running online, you know, a number of people, when you talk about, you know, the commissioner of oath, I mean, in signing documents, these things of physical presence, these are old ways of doing things. You can actually do things digitally. So the regulations, they start from, you know, Electronic Communications and Transaction Act, POPI Act, FICA Act, RICA Act, and all these laws that create an environment for people to be able to operate digitally. The fear, I would assume that, I mean, you know, my colleagues would have here is that to do certain things when regulations are still behind, that you have to comply, you know, in holding back your innovation as a business. So we really need to, I mean, and lastly, you can't have a model of vertical regulations anymore. You have to have this horizontal model of regulations, because, you know, what, for instance, a financial services institution, you know, African Bank or Standard Bank would deal with, it's not just only in the financial services environment. There are issues of data that would either belong to POPI, that would belong to justice, that would belong to communications. So we really need to educate our colleagues in government about this new environment. And if we don't do that, you know, we will make our organizations, our banks, our institutions lag behind, because they will have to follow, for instance, existing regulations, and let those who innovate, who come from outside, have no regulatory regime that controls them to build e-wallets and put it on a social media platform, which is going to happen.
Is there a resistance, or is there willingness? What are you seeing?
I think I mean, it's knowledge, to be honest with you. In my view, we need to, I mean, run seminars and workshops for colleagues, you know. And this environment, it requires openness. I mean, we are all learning here. No one really knows everything. I mean, everything changes here. I mean, smart contracts, I mean, blockchain technologies are changing every day. I mean, the cloud technologies, cybersecurity is changing every day. Nobody is really an expert or know it all. We are all students in this game. So really, I would say that, you know, colleagues in government need to understand this. We are all in this learning path, and they really need to embrace this and take advice when it comes to changing laws and regulations. Otherwise, this is one area, to be honest with you, Paula, that I worry that will create our financial services sector. And I mean, we will be disrupted, not because we cannot innovate. We will be disrupted because our regulations are holding us behind. And yet you have other people bringing products here that don't have to be local. These products can be used by local people because the internet is an open platform.
Okay.
Follow.
Yes, Sim, please go ahead.
Sorry, I hope I'm not being too disruptive.
No, you are not. It's okay. This is what this is about. We want to unpack these things. Please go ahead.
Yeah, unpack them and disrupt them. I think just to pick up again on Andile's propositions, the first one is any self-respecting financier on the continent ought to be terrified at what's possible if Libra, for example, was allowed in. And one then ought to ask why it is that they've turned their attention to emerging markets and they've been shut out of developed markets. It would raise very interesting policy questions. So that's one set of issues that are worth reflecting upon, because a big tech of that nature focused on payments on the African continent, having whispered sweet nothings into the ears of regulators, could cause a nightmare for financial institutions. So you asked me the other day, what's one of the things that keeps me up at night? It's precisely this, where inattentive regulators would allow players that don't pay tax on the continent, that have no interest in the economic development of the continent, but use arguments about competition and openness to cause complete dislocation and disruption of profit pools in the industry. So that keeps me up at night. The second one, which flows from that, is I do agree that regulators have to get up to speed. And they have to be as sophisticated, in fact, as the people that they regulate, whether that be the tech companies, the financial institutions, the big techs, the fintechs. The third proposition, which I would argue for strenuously, is that if regulation applies, for example, to banks, and there are players that want to do anything that looks like banking, they ought to be regulated precisely as banks are. So if it quacks, it's a duck, and it ought to be roasted like you would roast a duck, I would argue. And that's quite important because we've got massive installed capacity in the financial sector. And any player who wants to enjoy the benefit of that infrastructure ought to pay for it. Our customers have paid for it, as have our shareholders and depositors. So I would argue strenuously that that is the case. And lastly, I would say a hat tip. I would off my hat to the regulators in South Africa. I think that there are streets ahead of many of their counterparts globally. And they've done some amazing things. And I'm sure some of them are on the call. I think they ought to get credit for the good work that they do. Thanks.
Okay. Thanks for that. Basi, do you want to come in there?
I do. I think that the issue of regulation is such an interesting one, right? Because I think banks are very, very rigorously regulated. And I think all of us have mentioned that the cost of compliance is significant. I think Sim's point about spending 500 billion rand on cybersecurity alone, it just gives you a sense of just the quantum that we're talking about. And you can imagine if you're going to expect a new business to carry that kind of cost, it's undoable. You will create a very uncompetitive environment. So I think there definitely has to be some kind of balance between saying, if it looks like a bank, regulate like a bank, if you want to get the kind of innovation that you're seeing in other environments. So I think regulation, I agree with them. I think our regulators have done an extraordinary job under very difficult circumstances. And for that, I am grateful. But as with anything else, I think this is a time to rethink how we are regulating and whether or not it actually allows competition or not. And what this reminds me of, and I thought of it when Angela was talking, is in Charles Schwab's book on 4IR. So this book is probably about 3 or 4 years now, 3 or 4 years old now. So you'll remember Charles Schwab is the guy who coined it, 4IR. And so he's writing about, look, AI, machine learning, et cetera, in its kind of fullest manifestation could result in very poor countries and very rich countries. So you're going to end up with Apple worth 2 trillion rand to $10 trillion, and Google and all these guys who can afford to build and build and build and are sitting on massive cash piles. Then you're going to have just very poor countries. You're going to have, and maybe to some point, because of a lack of policy coherence in developing countries, simply because of just resources, you could end up with a situation that puts us, that makes us worse off compared to the richer guys. And his point was, given how fast technology is changing, it is almost unrealistic to expect governments to keep up. If you have to be thinking and changing as quickly as Apple to regulate an environment, it's too expensive. You can't afford the people. It's undoable. And what he suggested, which I think is also undoable, but probably the answer lies somewhere in the middle, is, if the internet is global, let's come up with another global organization that actually understands the various moving parts and is able to come up with regulations that can, manage competition more effectively. So obviously that's not great either, because then you have a big, you have the eye in the sky type thing, and kind of you go end up with a lot of other inefficiencies if you trust just a bunch of people to regulate you who don't know you. But certainly, I think the expectation that our own governments can do so effectively, I don't think that's realistic. Thank you.
Thanks, Basani. Isn't this then an opportunity for a reg tech startup to start figuring out how to solve this problem? Panelists, Andile, do you have any thoughts around that? How does and I'm asking this because there are quite a lot of tech startups here that are asking questions around somebody asked what are the top 5 cyber attacks that South Africa is facing, and others are asking around what are the entrepreneurial opportunities out there. So I'm just trying to also summarize that to say this problem that you all seem to be in agreement with in terms of we have the problem and there is a need for an intervention. Do you think that this is somewhere, this presents somewhat of an opportunity for a tech startup to look at how they look at the regulatory environment and see how it addresses some of the issues that are being mentioned by the three of you?
Yeah, I think there's let me put it like this, Paulo. In order to regulate what is happening, you need to almost have technology capability in all these areas. The other areas, basically, the regulatory model is changing. If you talk about smart contracts, in permissionless type, blockchain environment, this is a trust environment, and it's binary, it's not human, and this is something that is going to happen to drive transactions, to drive everything, basically. So you are not going to have an environment of a centralized place for, verifying and approving things. It's getting into this very decentralized model, and that sits across many places. And it has been proved, you go and read the white paper, published by this fellow in 2007-8, it proves that this is almost the best way to actually, build trust than a singular point. Singular point creates a point of failure that, could actually cause problems. So that then there's an opportunity there that, in my view, regulators should, allow these new technologies to come in. But let me take a much more contrarian view. Because I spend time in the dark web sometimes, so I know technologies that are coming. I understand the trade of alternative currencies that is taking place. My honest view, this might be, I think, the digital world will win. And the way in which we understand institutions today is going to change. I think we really, I can give you a lot of examples. Somebody was asking me, so why can't governments, go into the dark web and close this thing down? The answer is that they cannot, this is too complex and big, basically, and therefore, I truly believe that, if we restrict innovation and technology as regulators, we are creating alternative ways of working, which you cannot police. Someone is going to convert a fiat currency from South Africa into whatever crypto, to pass it on to somebody as crypto and convert it to the other currency on the other side. And things are happening because people, they feel that it's sometimes very difficult to do certain things. So my really suggestion to our regulatory, the issue of social media, OTT players bringing payment systems, transaction platforms. Google is building a cable around Africa. So is Facebook. Why are they doing this? Because they want to reduce the latency. It's not just about data, but it's getting into the transaction basically, they are targeting the unbanked of Africa to give them all these new wallet products. Now, to respond to that competition, in my view, basically, it is innovation. It is going to be us working with financial institutions and startups by building products that will compete, basically.
Yeah.
I mean, issue of cross-border developments of technology, I mean, it's happening today, and regulators will never be able to trace some of these things. They will never, ever able to.
Thank you so much for that, Andile. We have run out of time. We are meant to finish at 6:30. So I would like to give each one of you an opportunity to give some parting shots. But I would like to give direction on what I would like you to also touch on in your parting shots. So we do have a lot of entrepreneurs in our audience today, and I think everybody is really interested in getting a sense of where do you see opportunities for them to perhaps, or rather what problems do you think they can help you to solve, to start thinking about solving. So these are your tech startups. So there are guys in cybersecurity who are saying, why are you going overseas to get cybersecurity solutions when there's a whole cybersecurity ecosystem in South Africa? So I think people are just wanting to understand, what can we do together with you? Because it is here, 4IR is here, the digital disruption is taking place. We've talked about a lot of international players. We have got, as Sim said, a fairly robust ecosystem. Of course, I think we can do much more in terms of strengthening it. So what are your thoughts around, when we leave here going forward? What should you be thinking about? How should you be thinking about helping you as the CEOs of banks solve the problems that you're seeing, and in the process help us to identify what the opportunities could potentially be? Basani, should I start with you?
You can definitely start with me. Your question is a tough one. So firstly, thank you for the panel. I've thoroughly enjoyed being on it and engaging. So look, the problem that the problems that we and me and my exco try to answer on an ongoing basis is, how do we grow our customer base? How do we better understand what our customers need? And how do we retain our customers? And there are some fantastic fintech doing great work in the space. And I think this will continue to evolve. And I think it is a space that will always be relevant. Ultimately, if you don't have customers, you don't have a business. So undoubtedly, that's something to look at. I suppose the only other thing I would say in closing is that digital disruption has been with us. I think all that's happening is that it's accelerating. I am very concerned about where we as a country will land up, just given the fact that this is a global movement, and there's no question that the big 5 tech companies are looking at emerging markets and trying to figure out how they can get their share of that market. And given just how big their cash piles are and their access is, that's a significant risk for us. And I think the more we can think about, individually and collectively, how we become more innovative, more creative, and create value for each other, for our customers, and for ourselves, the better off I think we will be. So that's all from me. Thanks, Polo.
Thank you so much, Basani. Sim?
Paul, a couple of points. Firstly, you're 100% correct. There are definitely opportunities in the RegTech space. Huge challenges on how to digitize reporting, compliance, risk management, and so forth. And there's definitely opportunities for smart people in that space to provide solutions in partnership with financial institutions. What are we doing at Standard Bank in the space of digital support for SMEs? We've got a program called Simply Blue. It's an easy-to-use mobile app which enables a business owner to do everything that they need online. And I'd encourage people to have a look at it. Do we partner with fintechs? Absolutely. We've got a program called Moonshots, for example, which partners with fintechs to deliver improved client solutions. It's a well-developed program at Standard Bank. We also partner with large institutions as well. So it's not only SMEs, but also with large institutions, like I said, like Cisco, MasterCard, AWS, and so forth. And lastly, I do think that the South African national competitive advantage is vast, and it's up to us as professionals in this industry to continue to work at it. And conversations such as these add to that process. And so I thank you for the privilege of having been part of this. It was wonderful to share the platform with Masani and with the luminary Andile. Thank you very much.
Thank you so much, Sim. Andile, you have the last say.
Okay, thank you very much again. Let me thank my colleagues here. I mean, these are my clients in one way or the other. So I really must thank them also for that. I mean, in this platform, and also thank you for putting this together. My parting shot, you know, to entrepreneurs who are here, or to someone who is in a financial services environment, or to somebody who's pursuing a career, you know, spend time in CoinMarketCap, try and look and understand crypto and, you know, the trading of cryptocurrencies. You know, you don't have to go for the top 2 or 3 or 4, understand lower ones and spend a bit of money in buying and selling and understanding what's happening in CoinMarketCap. I would advise that. The 2 last things, try and understand Hyperledger. This is part of the Linux Foundation. You know, understand Hyperledger basically is very important. Lastly, you know, of course, I mean, I'm not selling Ether here or Ethereum. Try and understand blockchain broadly and Ethereum specifically. Thank you.
Thank you so very much to all of you for gracing us this evening. This has been an absolutely, great conversation. I have learned a lot. I'm sure that a lot of the audience members have learned a lot, but I think what it has really confirmed is that this was an important conversation to start having. It is indeed the beginning of the conversation, because I think there are very many strains that came out of this that we need to probably unpack a little bit further as we go along, as we try to get our heads around some see it as a threat, but I think I see it as an opportunity, what this opportunity means for us, and how do we fully take advantage of it as South Africans so that we are not left behind. So thank you all very, very much for being gracious with both your time and your knowledge. We really appreciate it here at ABSIP, and we look forward to future engagements with yourselves. Thank you very much.
Thank you. Bye-bye.
Bye, everyone. And your knowledge, we really appreciate it here at ABSIP, and we look forward to future engagements with yourselves. Thank you very much.
Thank you. Bye-bye.
Bye, everyone.